Hi folks, and welcome back to Meaningful Money. Okay, here I am in my lounge. It's not the most inspiring of backdrops, I know, but it's been raining solidly for about 6 days here in West Cornwall. Apparently there's a drought on somewhere, but I have no idea where that is, certainly not here. So I need to get a video up, so here I am inside again, I'm afraid. Now I'm going to start a little sort of mini series, excuse me, itchy nose, about successful investing. So before I get into that, my good friends down here in the bottom right, as ever, 7 Investment Management continue to sponsor me here on Meaningful Money, and I'm extremely grateful to them for doing so. They help me to keep going. So, in 15 years in this profession, I've worked with clients who have wanted to make all sorts of bad decisions about their investing. Now, fortunately, I've been able to educate many of them to help them avoid making these mistakes. But investors generally are their own worst enemies. So they do things like selling their investments when the markets are down just because they get frightened. Understandable, but not wise necessarily. They do things like investing in whatever the latest stock tip is that they've read in the paper that weekend. Well, legendary investor Warren Buffett is sort of classically quoted as saying, you need to be greedy when others are fearful, and fearful when others are greedy. And the second half of that, it might be the wrong way around, the second half of that just says that, you know, if you're thinking about investing once it's been in the paper, chances are it's too late because everybody's going to be getting on board. You know, bad decisions about investing lead to bad outcomes, and I think if you understand how investment management should be done, how it looks when it's done right, then hopefully you can avoid bad investment and avoid making bad decisions yourself. Now, I should say this is my view of what successful investment looks like. Certainly this is how I run what little I have at this stage. You see the pictures behind me of my daughters. You know, that's the main reason I don't have that much in the bank at the moment. But this is how I would want my money to be run. This is how we run our clients' money at my company at Jackson's. So I want you to sort of understand what good investment management looks like, at least according to me. But this is my forum, so, you know, I guess you have to listen to that. Now, it's worth just looking back at some videos. Numbers 105 to 108, they're what I call my success factors videos, 4 of them. They're more about general financial planning, really, the things that are important to get right in order to sort of ensure your financial planning success. So worth looking back at those, episodes 105 to 108. But those are more about general financial planning, and these ones are going to be talking about investment particularly. Now, I reckon investing is a science, okay? It's not an art. I don't want an artist looking after my money. You know, I want an artist to paint me a picture and put on the wall, or to sing me a song or something. I don't want sort of an artist who is sort of inspired by how they particularly are feeling that day to be managing my financial future. No, I want discipline. I want a safe pair of hands. I want to know that when the world seems to be going crazy, somebody with some discipline and poise is at the helm looking after my money. And so I'm going to explain how I think money should be run. Now, I believe it starts with identifying 3 things which are really important that you know in order to get right. So the first one is the return that you want. It's not first because it's the priority, it's just the first because it came to mind first, right? You need to identify the return you want. So either a target amount that you're aiming at or how much you want to make each year. But have something in mind, otherwise you're flying blind. There's nothing to aim at for your portfolio when you want to put it together. So return, how much money do you want to make, or how much return do you want to make? Secondly, risk. How much risk are you prepared to take? Now, risk is not just about financial loss, markets going down, it's about a lot more than that. There's a whole category on risk on meaningfulmoney.tv, so look that up and watch a couple of videos because there's all kinds of different risks. So identify which risks you are prepared to take and how much. And then thirdly, identify your time scale. How long are you prepared to invest over? Get that fixed in your mind because that has a massive bearing on how you invest too. So return, risk and timescale. Knowing those 3 things helps you build a portfolio, and the method of building a portfolio is called asset allocation, and that's what I'm going to explain more about next time. So thanks for watching this one. Sorry again, I'm inside. Hopefully I'll be outside for the next one. So from my lounge here in West Cornwall, thanks for watching, and I'll see you next time.